Hello everyone, welcome all of you. In today's lecture, we are going to discuss about the types of financial markets. Let us see the points for discussion. Today we will see the meaning and types of financial market. Then we will see the structure of Indian capital market, Indian money market and other emerging market. So first thing, what do you mean by the financial market? Financial market is a place or an arrangement where the financial securities are sold and purchased, right? This is a link between the buyer, or I can say the investors and the borrowers. It consists of individual financial institution, instruments, intermediaries, but financial regulatory authorities, all inclusive, or are the participants in the financial markets. Let us see. There are three types of financial markets in India. One is a capital market. This capital market is governed by the SEBI, that is a Security Exchange Board of India. Second type of market is a money market, which is governed by the RBI. And third type of market is a commodities market, which is governed by the Forward Market Commission. This is a structure of financial market. First one is a capital market, which is divided into the equity and debt. Again, the equity market is divided into the primary market and the secondary market and derivative market. And second market is the debt market, which consists of government debts and corporate debts. First, we will see what do you mean the primary market. Primary market is a place where the companies can sell their new issues. It means either the old company is selling the shares first time, they have to go to the primary market, or the new company is issuing the shares first time. So that company has to go to the primary market. That's why the primary market is also called the, security market for the new issues. It is called the market for the new issue, right? So what is the mode of issuing these shares? Means in what way the company can issue the shares in the market. One is a public issue. It is, the company can approach to the public, but not by issuing the prospectus, or they can go to the private placement, means they can approach to their relatives, friends and their partners, right? And another third one is IPOs, initial public offers. These are the modes which the company can go or participate in the primary market. Second market is the secondary market. This market is a market for the trading of the securities. This market is for the long-term investments, right? And here the buying and selling of security is freely trading. The mode of going to the or participating in this type of market is a National Stock Exchange, Mumbai Stock Exchange, or any regional stock exchange. These are the mode for participating in these type of market. Student, pay attention. In this lecture only I am going to give you the overview of about the markets. If you want to learn about particularly about the suppose take example about the primary market or secondary market, which type of instruments are sold, how they work, for that you just write in the comment bars, and I will make a video on that, and I will publish it for you in the YouTube. The third market is a derivative market. uh, the derivative market is a market where the future transactions are uh, sorry, for the transaction of a futures we have to make a contract in advance, right? So here there are main four types of contracts are there in the derivative market. One is a future contract, second one is a forward contract, next is a option, and next one is a swap. Through these four modes one can participate in the derivative market. What is a mode? Either you can exchange the trade, or one thing is mode is exchange traded, or another mode is over the counter trading. Next type of a market is a debt market. The debt market is again consist of three. One is corporate debt, second is a public sector unit bond market, and third one is a government bonds. Next type of market in our financial system is a money market. Money market is exactly opposite of a capital market. In a capital market, for long term investment, one can go and participate, and in a money market, for a short term, it means less than 1 year. Now the money market in India is categorized into the two categories. One is the organized market and another one is the unorganized. Here organized means what? Governed by the RBI. Unorganized sector means what? Where the no control of RBI. In an organized money market, there are again sub markets are there, like call money market, commercial bill market, T-bill market, certificate of deposit market, commercial paper market. Now you will think what all these things are there. See, these all are the instrument in the organized sector. Means organized money market means whatever securities or assets are purchased and sold is called the for each security there is a separate market. That market is called the sub markets of a organized money market. And in unorganized money market, these are the market for the indigenous bank, money lenders, non-banking financial companies. The example of non-banking financial companies are chit funds, nidhis, loan or finance companies, and finance brokers. See, I don't want to tell you again, but I'm repeating here. I'm only discussing about the markets which are available. What are the functions and role of the market? That for that you have to see the separate video of mine. Next market for you in the financial system is a commodity market. The commodity market deals with the commodities. There are two types of commodity. One is the soft commodities and another is a hard commodities. Soft commodities, if we are speaking about, it means agriculture products like coffee, cocoa, wheat, any type of commodities are sold or purchased is come under the scope of under the scope of commodity market. And if we are speaking about the hard commodity, here all mine goods, it means gold, silver, precious stones, all these are coming under the categories of hard commodities. And hard commodity is again coming under the scope of commodity market. Means if you have to buy and sell such type of commodities, you have to come in the commodity markets. And apart from these, there is a other emerging market like derivative market and foreign exchange market. So this way, student, I had only try to give you the whole picture or overview of the market. Thank you.